G'day, fellas. So here's to another Sunday session. It is the 19th of February. So last week, couldn't make it last week. Had quite a few things going on, but going on from the first call, what I said, I'm trying to make this a stable thing. So I'm gonna try and relatively same time. I'm trying to keep the same day. I'm gonna try and keep the Sunday session because that's generally when I do like my analysis for the week coming, and sort of reflecting on what's happened the last week. So I'm trying to keep it on Sunday, but the time may vary a little bit. Generally around lunchtime, it'll likely be. But all in all, I'm trying to make this a more regular type thing to host as Empire as a whole, like our group, the people who are in our Elevate community, as well as the people who are just in Empire, just for like our free group essentially. So first thing, what I normally do, what I always go through is I always reflect on like what's happened like last week and that sort of thing, and like news, as well as like what Bitcoin was doing and what some of the markets were doing. So let's start with, what can I start with? Let's start with this, because where were we last time? I don't remember. We were actually underneath. We were actually in here somewhere before we broke out. This was 2 weeks ago now. Right. So, so 2 weeks ago we're still within this downtrend here. Since then, we've actually come out and we've actually created a high. If you can see here, we've come higher than what we have here by a little bit.
Can you share your screen, Jared?
Oh yeah. Yeah. Yeah, better do that. Let's start again.
Yeah.
So 2 weeks ago, we were below here. I think it was, I don't even know. Anyway, we were below here. I know that because I remember talking about it, saying that we were holding at this level here. So it was looking promising. But we didn't know for certain at that point. 2 weeks later, we've actually pushed out of this downtrend here that we've had made from, when is this? 2022 January, start of January last year.
Can I just ask, the US 500 is that a bond or stocks?
It's S&P 500.
Oh, so it is stocks, like
like it's
yeah.
the S&P 500. Yeah, so stocks.
Okay.
It's the Standard & Poor 500, which is like the American stock exchange.
Yeah.
So obviously this level here, you can see it's created quite a few interactions. So coming above this sort of box, this green box area here, was actually it's actually pretty promising for the market, despite that all the stuff going on in the background, all the other stuff that's going on in the world right now. Having this come out, it's actually like an all right thing to see. When we were here, I remember saying like it looked like we were holding at this level, so it was actually looking like half promising, and now it's looking actually pretty good. We've come higher, so if you look here, we've actually come higher. Oh, it's only a little bit higher, albeit, but it's still higher still. So I would consider that a higher high. This would be our higher low. So we've made a higher low here, and then now we've come higher than what we did previously. So in actual fact, like it's looking like a trend change, the start of a trend change. It's generally the first indication of a trend change is the break in trend, or it's usually a higher low, which is what we got here before the trend break, and then we got the trend break. So that's like the next step of a new trend coming. So this may end up being something like this, and this might be our new trend. We might bounce along here, or I'm not saying this is going to happen, but from the signs that I've been that I can see here, we're in a downtrend. Now we've broken that downtrend, and it looks like we're trending up. So it's looking likely that something like this may happen. We might come up to this level here, this next level, this very key level here at 4,300. So we'll look at it a little bit closer. I'll actually leave it there because actually doesn't look too bad. Go into the 4 hour. So I've seen this as a little bit of a flag, just because for now, like it seems to have quite a lot of volume through this level here. I'm not looking at this volume here. I can see the volume within the candles, just like how big these candles are. So it looks all right, like as it is right now. Whether it comes higher and breaks up and goes to this up, breaks this flag here, or whether it comes lower, it's actually not, it's not really the worst thing, because if that was to happen, if it was to break down where it is now, and test this diagonal support here for this new trend and successfully push off, then I'd actually be really bullish. I could possibly see it come lower to this daily level here and then push out, and so that would be a test of this same level here, but outside of the trend, outside of the downtrend. And if it was to hold even there, like, which would, it would come a little bit lower, but even if it held there, like, I would still be like relatively bullish. But what I really want to see is if it does come down and reach this diagonal support here and holds, like that's pretty promising to me. I would see that it's quite possible that if we hit that level and bounce, that we will see this 4,300 level. Whether we hit this 4,300 level and then like come even lower, I don't know. But it's looking likely that if we were to do that, I probably would consider like us going all the way up to here, and that would be quite a significant run, like especially for the stock market, but for Bitcoin as well. And we would see that as a result.
How do do you like ever use, I don't know if I'm saying it right, but is it like the Bollinger Bands?
Bollinger? Yeah. So
how do they work against something like that?
So I can put them on. Yeah. So generally when you see like contraction, so like, let me see if I can find it. I might not be able to find it. Might have to go here.
So at the moment they're showing us sitting in the upper band.
We're on the 4 hour, we're on the lower band.
Okay.
But I'm just trying to show you how to interpret Bollinger Bands, how they're meant to be interpreted. When the bands, like the two blue bands on the outside of the price, when they are, so I just think of this as like a little, like a snake type thing. I just think of like the whip of the snake, and then if that snake gets really close together like this, that means it's getting very very volatile. It's going to be volatile because it's showing that there's volume increase. There's volume, like the support, there's a lot of volume at that level, but the price isn't moving that much. Like it's only going up, 1%, 2% over however that long is there. That's probably like a day there. So over a day, the price is going up 1%, down 1%, up 1%, down 1%. So like it was like really volatile, and it was constricting. So you can see here, like obviously if you look everywhere else, it's the two lines are a lot further apart. But here they're constricting, you get that, and then you get that volatile push. Sort of thing. So you'll see that a lot. That's generally how it's used. But there is ways to use, like, so I'm trying to develop a scalping strategy using Bollinger Bands, but that is using it a little bit differently. That's using it with a momentum, like another momentum indicator. I'll probably like because it's still under progress. I still haven't finished it yet, and there's still quite a lot of research I've got to do for it. But it does have Bollinger Bands, and it does have momentum indicators. And Bollinger Bands is really common for scalping, and it's actually really common for like bot trading as well, like people's algorithms and that sort of thing.
Okay.
Like I don't use Bollinger Bands that much. Like every now and then, like. Because I can tell generally where we're getting, so without having Bollinger Bands on, so I'll just get rid of these right now. I can tell that this level here is, I can tell by looking at it that it's building up to something. I can see that, sure. Like once you like develop knowledge and like look at it often enough, you're eventually going to know. But I can just see, because no matter what you look at, it looks like it, you can just draw this as a rising wedge, and that's the same. That's literally interpreting a like what you're going to see on the Bollinger Band, you know. But like I said, like it does help. Like when you're starting out, like I did do it quite often, where I would look at BTC and I'm like, oh, okay, and then I'll just put on Bollinger Bands and then look at it. Oh yeah, it's constricting, and then just take it off and say, all right, cool. And then now that I know that information, you know, I can add that into my
sort of see what it
analysis
looks like without it.
Yeah, correct. But so that's.
Yeah, I've only been studying this stuff for about a week in the Elevate sort of class thing, so it's good to know.
Yeah, so you're right at the beginning, which is good. It's fresh for you. So that's the 500. So that was last week. Now this is now. So yeah, like as I said before, if we hold on this diagonal support here, I'd actually be relatively bullish in the stock market, at least until we get closer to this level up here. Because as you can see, just by a pure market structure, which is the main, you know, detail of, you know, what sort of market you're in, it's looking bullish right now. So like I'm actually fairly bullish on the stock market, which means coercively I'm bullish on crypto and Bitcoin as well. Just move this over here. And let's have a look at some other things. So let's have a look at one of my stuff saved. Yes, it did. Okay. So after quite a significant drop in our Dixie, which is the US dollar, we have found a significant level that was previously tested here, which saw. The way I look at this level as being significant, so it's obviously because, you know, I think, you know, both of you guys are new, so I'm just going to explain this now.
Yeah. This
level would be considered significant because after hitting this level here, we literally went from 101 all the way up to $114, which is a 12%, almost 13% increase. Right.
Yeah.
So that's telling me that like price, you know, pushed up, it come back down to this $101, and then people started pooling money back into the US dollar because it was at the time, so whenever this was, it was considered like very cheap, and so it pushed all the way up. So the fact that it made such a large push from that started at this level, that's telling me that this level here is going to mean something if we were to come back to it, and that's obviously what's happened here. There's another level right here as well, and we've since pushed above that. So that's not the best thing to see in regards to like crypto and stock market and that sort of thing, but it's looking like we're showing a bit of rejection here with the some of the EMAs here, but I won't go into EMAs just because they're a little bit too much to jam into one session.
No, that's cool.
It's EMAs is just an average. It's literally just an average over time. So different numbers mean different amount of candles involved in the calculation. So we'll just see if we can see anything on the 4 hour. So yeah, we can obviously see here that this level has held up pretty well as support and resistance. And since then, we've pushed out, come back down, tested it. Yep, all good. Push back off. So whether we come back down below or whether we keep going will depend on what the stock market does. I would presume if we have that drop in the stock market, we might see the Dixie come up a bit more. Once we get to that. Or down a bit more, so it might actually come back down to this weekly level here. But once we get up to that 4,300 level on the stock market that I was showing you just before, we might see the Dixie rocket off and push off because the S&P 500 is getting rejected at the significant level, which alternatively means that the Dixie is going to rise in value because they're inversely correlated. So if one goes up, the other goes down, vice versa. But at the moment, like it's pushed above this pretty significant level here. Depending on what happens when it comes back down to this level, will depend on what we see in the stock market. So that's probably within the next well, I would say a couple of days. So I'd give it to maybe Tuesday or Wednesday to get a resolution on what this is going to do and how it's going to impact the stock market. So yeah, give it to Tuesday, Wednesday, something like that.
Nice.
Also, I wanted to actually go and do nerf. Oh, I didn't say. Maybe I'll do that next week. Yeah, maybe I will. It's just too much. Yeah. Okay. All right. So this is the NASDAQ. So this is tech stocks. So S&P 500 is made up. I think it's something along the lines of 30% or something like that of tech stocks. So tech stocks makes up most of what the economy runs on. Obviously, like this is the economy, like this is the technology era. So a lot of the world economy runs on tech. So tech stocks are almost more valid than the S&P 500. Although S&P 500 is considered a little bit more safer because they do have a lot of more stable sort of companies in there. But in the way that when there's a bull market around tech stocks like the NASDAQ or whatever, tech stocks usually see a lot more gains than banks and that sort of thing generally. But just really quickly, it's looking like we're seeing some sort of pennant here. This is a weekly time frame here, so this is months away from seeing a resolution here.
Yeah.
The daily. Yeah, it's looking. Yeah. So we're coming back down to this level here. If we were to break down or hold at this level and come all the way back up to here, which will coincide with our run on our S&P 500. So if we get that run to 4,300 on S&P 500, you would most likely see the same run here up to this level here, and then depending on what happens after that, we might see a breakdown or break above, depending on how the market is in that state. The way that it's looking at the moment for this year, it's looking like they're going to increase, like this is my expectation, they're going to increase rates 2 or 3 more times before they start trying to ease off. And during the last time, or this last time to the second last time they raised rates, we're likely to see like stocks and especially crypto be extremely volatile. But that's at least probably around 6 months away. So just wanted to see if actually I'll check this one too, because I do like this chart. I don't really do any analysis on this chart. I just check it every week just to see where we're at. So this is the S&P 500 stocks above their 200-day moving average. So this is literally just, so as I was saying before, like it's just an EMA, 200-day moving average. So this is just telling you in percent of the stock of the S&P 500. So this is 30% of S&P 500 stocks. The 70% of the S&P 500 stocks are above their 200-day moving average. So when it's really low, when it's down like here, that's when we have, very severe drops in the market. That's saying that, only 11% of the companies in the S&P 500 were above their 200-day moving average. That's showing a very weak market, and generally that's a good sign to enter into the market, because if a lot of the stocks are all showing the exact same thing, they're all showing weakness, generally that's a time when you're going to get that turnaround. But since then, it's looking good now. It's still looking, it is still looking good, but it's looking 66% of companies in the S&P 500 are above their 200-day moving average. So that is showing, a little bit more, sort of in like a lot more people are sort of interacting with the, like buying those sort of stocks right now, just because. Obviously we can see it. It's a lot of the stocks, 66% of the stocks in the S&P 500 are above their 200-day moving average. So that's just an expression of the stock market is doing pretty well. I'll just see if my analysis on here has stayed. Okay, so let me see this. All right, so this is the same thing as, kind of the same thing as the Dixie, in that it is inversely correlated with stocks and crypto, because it is considered a lot. Bonds are a lot more safe than crypto, so it's low risk sort of stuff. Then crypto and stocks at high risk. So when this stuff when bonds generally like shoot up and rise up like this, generally you see the opposite reaction on the stock market and crypto. So seeing this come up like this is not the best sign, but this is the 2-year. So it's look at the 10-year, which is the same thing, relatively the same thing. So it's come up that broken the trend, come up to the same level here. So we might see a pullback here. So we might see it come back down lower, and that's when we might see Bitcoin and the stock market shoot upwards up to that 4,300 level. So we're at resistance right now. So it's looking like if this does come down, we'll probably likely see that push up with the stock market over the next. I gave it like 2 months. What did I say? 2 or 3 months, something like that.
Yeah.
So at this point, all the analysis so far is looking relatively bullish for crypto, relatively bullish for S&P 500, which is the stock market and that sort of thing. So all in all, it's looking pretty well. Let's look at this really quick. Yeah, so now it's fine. Same thing pretty much. Alrighty, cool. So now we will go to, let's put this back to here. Go to Bitcoin. Actually, has anyone charted Bitcoin at all?
No, I haven't learned that yet, really.
Okay, that's all right. I was hoping someone would be on to show me what they were seeing first, and then I could show it. Anyway,
yeah, I can do it.
Go on. Yeah, you do it. Actually, I gotta make it so you can.
I mean, chart it like yeah, it's a good practice, I guess.
Yeah, of course. I'll just stop sharing. Share. Show me.
Man,
I want. So the first session I did, like I want these sessions to be very interactive. I want people to be very comfortable talking and present and showing, whatever they have to offer. I want it to be like a friendly community. Anyone can say anything without being, have the fear of, someone coming in and saying, "Hey, that's wrong," or whatever.
So I'll share my screen.
Yep, go for it.
Hang on. Google Chrome. But this is just what I learned from the 30-day like charting.
Sure.
Okay. So the first thing is we identify support and resistance. So this level here, I'll go to day. So this is a day chart.
Yep.
So I can mark that as a daily support and resistance, and we usually draw a box just to cover the wicks that there's a zone that goes in and out.
Doing really well so far.
Thanks. And then find other support and resistance. So this one right here seems like it just, you can see a lot of up and down here on this level, and you can find more like they kind of what do you call that, overlap.
I would so that one you have at 19,251.
Probably
that
not.
one, no. So not it is a support and resistance, but I would see that as an EQ, which is like a zone. It's not necessarily so you can draw a box if you want.
Yeah.
But for I do like using boxes for support and resistances, but for EQs I don't generally use them.
Okay.
Because you can see
because it's here.
Just because if you move further to the right, where the price was freely, no, like go back to where you were before, like zoomed in. So around that September, where it says September, between September and November,
Yeah,
see how it was just like choppy, just going over it,
Yeah.
and like it wasn't like it was really there, but it was.
Okay.
It was a section, like a lot
Yeah.
of trading happened in that area, and it
So
was
I guess I can remove this and then just draw a box.
so like I said, like I don't like I would consider that an EQ, but I don't draw boxes for my EQ. I just put a line in there, and then I would just
Yeah.
label that horizontal line as EQ, because it was a it was a line at one point, but it sort of turned into a zone where people were happy to trade, like happy to buy and happy to sell.
I see. So what does EQ mean? So you just put EQ there, like a
Yeah.
yeah.
What does that stand for?
Equilibrium.
Oh, okay.
I was just like,
So can you, is this a support and resistance? Because this looks like EQ too, but it doesn't
Yeah.
correlate with the left. Like a
I would say, yeah.
yeah. Yeah, I think that's the daily. Then we will go to the 4 hours
Yep.
and see if there are further support and resistance you can identify.
Mhm. So
It looks like
that big blue box you got at the top there,
yeah.
I for the time frame you're looking at, I probably wouldn't have that one there.
Okay.
And just because it's a little bit too big. Whenever you use a box, the way you use boxes are when it's like price is tight, but not like tight as in like a line, right? The only reason why you use a box is to like, because the line isn't too, it's not wide enough, but the box, because you don't want it to be too wide. Otherwise, it's just like you draw a massive box over it and then just say like, what does that even approve, sort of thing, especially on the time frame you were looking at. But that's all.
Right.
But yeah, keep going.
Okay, so we'll just do it like that.
Yeah, I like that.
Then we can draw a trend lines. From what I can see, it's
I got a little tip for you actually before, because I can see you struggling trying to move around.
Yeah.
See the bottom right there where it has the time. Keep going, bottom right. Time. No. See where it says. Where I got explain
Here.
Hang on. Where's my little?
Okay.
Hang on.
It's like you can expand it like that.
See that? Where it says auto. So look on Zoom. I've drawn something on there.
Sorry, you have to share your screen.
No. I've annotated on your
okay.
screen.
Okay, yeah, I see it.
Auto, yeah.
So click untick that, and now you can move these axi, I guess, independently. So you can drag this one up, drag that one across.
Oh, okay.
Because I can see, because it's auto, it does your y-axis as much as your x-axis when you're scrolling. Like it's a 1-to-1 ratio. But when you take that off, because obviously some charts aren't they're longer. You need to see longer than you do wider.
So I always wondered how they do it, because this thing just adjusts automatically.
Yeah. So it looks like to me now you have to use like the y-axis. You have to spread it out more. So grab this bottom part here, grab here, and swing it out this way.
Okay.
Yep. More.
Like
no. Like more. Like go. Like zoom in
to
a
the
bit
left.
more. Yeah.
So we zoom in.
Because you're looking at a 4 hour, so you want to be a little bit closer. Yeah, that's him.
Okay. All right. So I think this is it. Like
looks better.
Then we draw our trend line. Oh, it's a little bit hard. Hang on. I'm like struggling with that trend line. I think this you need to touch the wicks.
It's funny because
Yeah.
there's not really a decent trend
Yeah.
at the moment because we haven't really had a significant
Is it sort of
healthy.
true anything over like a 45-degree angle is sort of too steep of a trend, or
It's not so much angle or anything like that. It's just you like to see like you want to see like a strong move
Hmm.
and then a healthy, retracement. Strong
Yeah.
move, healthy retracement. What you can see here, I'll just annotate again. This here doesn't look like the healthiest retracement because it looks like it's just pushed up and then it's just come down a little bit and just kept going.
Yeah.
keep going up? Yeah.
If it was to so I would only draw a trend here from what I'm looking at right now. I would only draw a trend line in if like we had have come up here and then come back down to like maybe this level here and held, and then I would draw a trend like this.
Okay.
But
So-
at
but-
the moment it doesn't
There's no
the-
clear.
yeah.
Yeah,
Yeah.
so I'll remove it. Okay. Um, but you can see that it's like moving up, and I can do the Fibonacci retracement when it should shut up, just to measure how far it has retraced, and then we'll publish. So it retraced to the 0.382 level.
Mhm.
So which it seems to be headed to the direction of minus 0.272. So that's my analysis. But
Yep.
if I put other indicators,
Mhm.
it says bearish here for some reason,
Yeah.
but it is trending up like a little bit.
Yeah. So if
Yeah.
you zoom out a little bit, this that level that you have right here, I would consider that a support as well, because if you look further
To the
back
left.
to the back a bit more, it actually
Yeah.
lines up with this.
Oh, okay.
Well, from
It's-
what I just saying it looked
Yeah.
like it. Down a bit.
to here, that one. There's a support.
Yeah, up a little bit more. Yeah,
Here.
around there. That'd be like that one of your zones, like a little zone there. I'd probably put a little zone, but a
Yeah.
line's fine. Line's perfect.
So
But you can see like the reason why I like those like that support like that line right there is because we pushed up to it, we were butting it, we come back up, we come back down to this level, and then we pushed off again and just kept going up. That
Yeah.
means that it's acted as a resistance, so that's a tick, and it's
Mhm.
also acted as support.
Yeah.
So to me, that's confirmation that that level is like
So
that line
support.
there is good to go.
Cool.
Hey, you done pretty well, mate. For someone who's relatively new, you done all right. You done good, mate.
Yeah. So any trade opportunities? I'm not so sure, but for me, it looks like it's going to go up more.
We have been bullish over the past month or so. Even
Yeah.
we've been bullish over the last week or two. We've been bullish over the last very few days, like recent days. So yeah, I would agree.
So if there's auto again. I think I clicked the auto.
Yes. No, sometimes so if you what you did before, it would have changed it. When you
Yeah.
clicked on your set strategy thing, it resets
Oh.
it. It'll flick it back to auto.
Oops. Remove this.
So
if-
when he
if-
just said his Fibonacci tool, what number did he actually start off? Like on the lowest point sort of thing?
I'll like go through a full
Yeah.
thing a little bit later
Okay.
on for you.
Yeah, because this one I started from the bottom of the wick, the lowest bottom, and it goes to the highest where I can see, and then you can
And
measure
then
your
it works it
price.
out itself.
Yeah,
Okay,
and
sweet.
if my analysis is correct, if it goes to the 0.272, you can enter it there, or maybe more, and this will give a risk ratio of 2.21. So, which I think is a pretty decent trade if you go now. Like, but I'm not really sure. But that's just
Yeah,
the way I see
mate,
it.
you done all right.
Cool.
You done all right. You're done a good mate.
It's good
Right,
to see.
so I'll show you
Yeah.
mine.
Okay.
So I'm going to say mine looks relatively similar, but I have a little bit more foresight,
Okay.
right? You
Sure.
obviously you're you're quite new or whatever, so
Yeah.
I can sort of think ahead on how what it might look like, maybe a few days from now, a week from now, type of thing. So,
Yeah.
but I'll show you what I mean. Bitcoin. So let's just look at the daily real quick. Right, so on this chart, so mine may look a little bit different to yours, but that's because I used log chart.
Oh, okay.
If I turn to see if I so you're gonna this is gonna wig you out, but if you look at this downtrend here, we've only really just broken it, tested it, and pushed off. But if I hit this, we were out of it long time ago.
Mm.
Oh wow.
Yeah.
But I like using log chart because it's how can I say this? It's a little bit more significant to me because log charts over longer periods of time, for me, it is technically more accurate. But it's whatever chart you want to use. But for when I'm looking at the daily and the 4 hour, I do like the log chart. When we and you can see it in this situation here. That same line, same level and everything. Like when we broke out here, there was nothing. Like it was like, there was not really anything there, no volume, and then we just went
Consolidating sort of
and
thing.
just, we didn't really do much. So that's just saying that to me, that line on the not log chart, on the linear chart isn't really that significant. And it wasn't just then though I realized, I've used log chart for a while now, but for this exact reason, but that is just a good example. But you just use whatever you want, right? Like linear, log chart, whatever, just use both, and then whatever you find most success with, do that. Like I find more success with log chart, so that's just what I do. Whereas if I go to the log chart, let's move something. We had that massive significant push all the way out over, I think it was 2 weeks. So 2 weeks of solid price action. Broke out of that with volume. We had massive volume over these few days here, and broken out, come up to this level, out to our previous high here, come back down, tested our low here. So this is that bit of an EQ level. It's kind of a support, but I think it was more of an EQ because this level here didn't really interact very well. Not for my liking anyways. But significant levels for me, like not EQs, like support and resistance. I like when I like seeing this one here. When a level is broken and absolutely just smashed, like it holds up and then it just smashes through, that's telling me that level there is very significant. That's just the way I see like support and resistance. But this EQ here, I see it a little bit more of an EQ because when price did get here, it stuffed around here for a couple of days, come down, stuffed up here for a couple of days, did the same thing, and for about a week here did that. So whether you look at it as support or as resistance or EQ, it doesn't really matter. You can draw a box in there even. If you were to draw a box, it would be something like this, something like that, which works out in this instance anyway. But I use boxes for support and resistance mostly. Like I said, I don't really use them for EQs. But going off what I said, we've broken out of this downtrend here on the log chart. So that's good to see. Obviously, we've had a lot of positive price action in the last month or so that's been really good. Going to the 4 hour now. So this is what I was seeing on the 4 hour. So this to me looks like a recipe for a bull flag, or what's it called? A symmetrical triangle. So it's taught in Elevate as a pennant, like a bull pennant, bullish
Yeah.
pennant. What they label it as. So I was to get fit, so I'll actually go through fibs right now. As soon as that's here. So going through fibs, the best way I like using it is finding a significant run, no matter what time frame you're looking at, whatever it is, significant run. I mean, like it's hit a level that means something. So here you can see this level was like obviously we zoomed out before. We know that this level here is significant. So it's hit that really significant level and then just rocketed it off.
Shot it up.
So what you do then is once you find that level that's been shot out of, find the bottom right here, come to the top. So that's what the fibs would look like.
And you go to the very top of the wick.
Very top, like you go to the very top of the run before it saw an interaction, downwards. So
it's actually bouncing to the 50.
Yeah, so it bounced perfectly, like smack cheeks on that 50 right there. And since then we've obviously this has been a weekend now, the last couple of days. So the weekend would have been like back here. So we would have been about here. So the last week over the weekend we've gone up a little bit, but we sort of stuck around for most of it. So it bounced off the 50, which is a relatively good sign because if you see a significant run and bounce off the 302, which means it's going to be generally it's going to be a significant, like a really strong run. Going to the 50 is a very level in between type thing, and then it just shows you like the amount of momentum in the move and how much left is potentially to come. So if it comes all the way back to the 6, so generally what you see in the markets is like the first run, you'll see the first run or whatever, it'll bounce at the 50 or the 382, go up again, and then it might do the 50, and then it might go up again, and then it might come all the way back to the 618, and that's showing that it's coming weaker and weaker as it comes down, and then that's when you might see that like lower high, and then like if you look at Elliott Waves or whatever, you might see that ABC retracement back down, and then you'll see that next one up. But so in this case, we bounced off the 50, which is good. It's looking like I'm just interpreting this in the future that this is going to be a bull pennant. So I'm just going to get rid of fibs because we can confidently say that it bounced off the 50, but it's looking like we bounced perfect over this level. Really like a really good, like pretty strong run up, strong run down, and like that's what you want to see in like a pennant. You want to see that indecision. You want to see like as soon as it hits one level, it rejects instantly, hits the support, rejects instantly, because the more volume there is and the further you get down in this triangle means the more volatile that move's going to be. It means it's just going to either just go like that or down.
Or either way,
What I'm looking at right now is what you can see. I'm going to wait. So we can see there's a lot of wicks right here. So we've obviously seen quite a lot of selling pressure here at the moment, which is to be expected around this daily level here. So what I'm trying to see here is if we come back down here, create a high low, maybe like a big hammer or something, like a wick down and then a close back up above, or like a morning star or something like that, something to tell me that like there's buyers here waiting at this higher level here, and then that's when I may consider like entering a trade here. I have my stop below, somewhere below here, this previous high low, and then I might target where that resistance is up here. So it would look something like that, or it would look something like this. Come back down to this level here, and stop loss below the support here. So it looks something like that. But so the best way for you to learn how to trade and how to see into the future type thing. Obviously it's like a time thing. Like the more you do it, the longer you do it, obviously the more you can the more you can analyze it like that yourself. But best thing you can do is when you see something like this, like when you get to the stage where you can see into a little bit into the future and have a guess on what you may see in the market in the next couple of days or whatever, draw in what you expect. right? So like draw in, oh yeah, it's gonna go like this, it's gonna come back down here, and it's gonna bounce.
Hmm.
So then you can see, all right, where does it like generally? So it's come back down here. Let's just sorry. Let's delete this, do it more accurately. So you can come back up, down here. All right, cool. So when did it bounce here? So we're looking at, hang on, probably tomorrow, between tomorrow and maybe Tuesday, we might see that rejection and we might see that interaction here down below. So that means come those days, you know, I look at the charts every day anyways, but if you didn't look at them that often, you can say, oh yeah, like I'm gonna put on my calendar, check the charts Monday, check the charts Tuesday or whatever, and then you might see like, oh yeah, that level held, all right, cool, I'm gonna look for a position or whatever. Or if that doesn't happen and like it
Went the other way.
comes below, it's like, okay, cool, now I'm gonna wait for retracement up here, and then I'm gonna wait for that evening star hammer or whatever, and then I'm gonna do exactly the opposite thing. I'm gonna go like this, put that there, I'm gonna have my stop loss above here, and I'm gonna aim, let's just say aim for this back end, this support here, right?
Okay.
But that's one thing you can do. You can, like, draw in what you expect, and then see where you would enter a position, and just see roughly where you think that in regards to time that you might see that interaction happen, and then in that way you can say, oh, I'll check the charts Monday, check the charts Tuesday, right? Just get rid of that, get rid of that, get rid of that. Right, so that's Bitcoin. Does anyone want me to have a look at any other coin really quickly?
No, I'm pretty good, man.
This is,
Right,
this
so
what has been helpful. Yeah.
right, so fibs. Well, we'll go for a little bit of fibs. I'm not gonna do that. Let's do it here. Yeah.
Maybe you can go do Matic if you got time.
Okay, yeah, sure. I'll do that real quick.
I keep losing on that Matic coin. Like
I'll blast through it. Where are we looking? There it is. It's been a while since I looked at it, I think. Let's look at the daily real quick. Okay, has been a while. Let me just delete everything. Is this OKX? Yeah. Oh yeah, because it's only been in the thing since. All right, so what do we got here? So it's looking like it's broken this pretty significant level here. I'll draw a box in actually just to make this happy. Make it a little bit easier for you to see. Something like that. So it's actually looking pretty good on the daily anyways. We saw the last rejection at this level here. So if we were looking at a trade, I would at least, if we were to enter a trade, at this support level when we come back down, I would at least watch this level when we get to it. So I would put that as watch. But the last time we saw a pretty heavy rejection was up at this level here, the 2.8. It's a little bit hard because I don't know what's happened back from here, because it's OKX, but let's just assume that this level has a couple more touches more to the left. Let's just assume that.
So does OKX only give you a certain amount of time, like going back type deal?
Well, this is when the coin got introduced on OKX. It hasn't been on the yeah, so it's only been on the market since April 2021.
Okay, fair enough.
Yeah. So yeah, it's looking so okay. So we've done the daily now. So I would actually do this as well. Do a box is something like that. So let's go down a bit. So it's looking pretty good. This level here it seems to have like love a lot of volume. So you can see here, there was a lot of volume in this area here. Having a lot of volume go on right at resistance generally isn't a good sign, but we come down a little bit lower, and then we picked up all these buyers that must have been waiting here at $1.14, and we pushed off and actually broken this level here. So that's actually a really bullish sign. So we might come back down to this level, here, where we saw massive volume, and we might see that there's a chance we'll probably see that again, and we see massive volume again at support. Generally, that is a good sign, and we're going to see that move upwards. So Matic is looking like pretty good. You know, it's going to have that whatever that is, like 10%, 10% drop there, but if we come all the way back into that level, it's probably a pretty decent time to enter, depending on where where you get like some decent candles that hold up, maybe Morningstar, something like that. You can, let's just say, or you can use, in this case, if you would like to use said strategy, you know, enter at the top of the box, bottom of the box, in the middle of the box. Let's just say we that's how we do it, and we put our entry in like here. So we'll put our stop loss below here, keep this level as a watch. So even if we get to the watch level, it's still a 2.2, 2.3, so that's not too bad. But we want to try and target the one up here. So yeah, it's looking pretty good. So yeah, I'm actually going to save that. Cool. So I'll go through fibs really quickly. So I'll look at let's have a look. I'll just probably draw it. It might be easier if I just draw it. Let's just say that's my trend. Where is it? Yeah. So let's just say we're in an uptrend here. We've gone up, we've come back down, maybe to like here, something like that. Come up again. Second run is a little bit higher than the next, and then let's just say that's hits our resistance level or whatever it may be. Actually, yeah, let's do that now. So what I was saying, what's playing before with Fibonacci, you want to find a strong push where it's seen a level of support. So let's just draw this in real quick. So let's just say, you know, whatever time frame we're looking at, they're on the daily right now. So let's just say the daily. So it's this daily level that's been tested multiple times. So let's just say actually, you know, we've come down or whatever. We've stuck around here for a little bit. We've come to here, and then we've pushed off. So that we found that significant level, pushed off, made a significant run, broke our previous highs, and made a new high. Then we're waiting for that high low. So we get our Fibonacci tool, come to the bottom of the wick. We want to come all the way up to the very top there, and let's just say it's bounced here. Cool. It's bounced at the 50.
Right on the 50.
Right. So that's when you can say. So at that point, obviously before that, there would be no trend. But once it goes back to the 50 and then pushes off again, you're going to okay, cool. I'm going to draw. Sorry, get rid of that. I'm going to draw that trend in. So from here to there. All right. Where am I going to expect this to come now? So you would get your fib again, and go from here to here, and look at, oh, okay, it's going to go. It's coming back to the 618 now. So let's just so you might look at that as so you say if you're just watching the price, you know, like come down, retrace a little bit down, and then it's coming close to where this line is, as well as that intersection with your Fibonacci. That can give you two really good indications right there that it's looking like a time to look at an entry for a long position in this situation. And then so it would look something like this. So if you were to trade it off the 618, let's just say at this level here we've seen hammers, Morningstar, whatever it may be. So I would enter here. Okay. All right. Let's just put minus 5,200. Okay, interesting.
It does it automatically. Yeah.
So let's just say like that. And then this would be, so if I'm trading off the 618, you target the 236. So easiest way to remember it. So generally the way I trade, the way I use Fibonacci, I like entering based off Fibonacci, but more on support and resistance. And I like exiting off support and resistance. I look at Fibonacci levels as watch levels, but I don't really take them into too much more consideration other than watch levels. But in theory, you're meant to trade them to certain levels. Essentially, that's just the way that it's designed. So easiest way to think about it is 3 levels, wherever you enter. So whether the 382, 50, or the 618, you'll enter wherever you enter. 3 levels above that is where you theoretically should look at exiting. So in this case, we're exiting on the 618. So 1 level, 2 level, 3 level.
Around the 22.
And then if we enter, so if we enter here, then our stop loss would be the 618 then, and then we would target the 0.
Okay.
And the same thing again. If we enter the 318, we would have our stop loss there, and we would target the -27 or the -618, depending on support and resistance at the level. But in this case, the -27 lines up perfectly with that level that we've drawn in. So we're going to just use that and target that. Depending on what you want to do and how you do want to trade that, whether you have your stop loss below 1 level or however, whatever you put in your strategy, you're gonna have to figure that out yourself. But you can have your what's it called, your stop loss below the 618 at all times, no matter where you enter. And if you enter off the 618 all the way down the bottom end, then you would have it below the 786 for more security. But let's just say in this case, we've broken down. So let's just say something like this. Let's get rid of this for now. And then we've hit that level. Let's just say we bounced again and come back up. And let's just say we made a lower high there. We haven't broken the trend just yet, but you look at the lower high and all right, cool. I wonder what's going to happen if we come back down. If we reject enough to come back down to this level, you see this level here, and what if we get it again? Okay, we're seeing signs of slowing down. Then you might see something like this, and you're like, okay, this ascending triangle or bullish structure is now starting to possibly turn around in the opposite direction, right? So then, so we'll just do that for now. So then, okay, so this is one of my strategies here, but I'll go through that really quickly. You might say this move here isn't like a significant move, but it broke this level here, which was significant, obviously previously. So then you would get your Fibonacci, go like this, go to wherever it stopped at, and then you would wait for the interaction between all these levels here. And generally all these levels here generally line up with support and resistance. Whichever one lines up better, that's where you take the trade. Or however you decide that you want to trade. Like if you want to only take 618 trades, or if you only want to take 50 Fibonacci trades, then that's just how it is. And then you would trade it down to maybe even like this, the level of support down here. So let's just say we only take trades at the 50 and the 618. So let's just say we've got that below the 786, and let's just say we're targeting that support level. And it's the same thing here. Like if I was to enter off the 50, generally speaking, I'm meant to be trading it to the what's it called, the 0 here. But like I said, I generally like trading it to support resistance. So that's how I would trade it in that situation. Alrighty, you got any more questions on fibs?
No, that was very helpful.
Yeah, it's very good.
So what else is there? Probably do.
Can we have a look at another coin? IGU.
Sure.
GU, I think it is.
So
Let me just.
Yeah, I think it only just hit the market on OKX.
Oh yeah, yeah, I know that one.
probably not there yet, or
No, it is. It is.
okay.
Let me just. I'm gonna delete one of these. Delete that. Right. Hang on. I'll just leave it. IGU. IGU SDT. That I guess. I don't think I'm guessing I don't have a thing yet. And we're gonna have to
There's
definitely
nothing to.
definitely gonna have to look at a
Yeah.
lower time frame.
Okay.
Maybe 15 minutes. Yeah, I mean, so far it's since release
Trending down.
trending down.
Mm.
Depending on whether we hold here, it's looking like it might. There's a lot of wicks going on here, so that's showing buying pressure. And if we hold here and break above, you know, we've got that high low, we've got the breaking trend, so we might see a little bit of, you know, price action moving upwards. But
Yeah.
obviously there's no way I'm drawing support and resistance on this because there's not
Or,
really
yeah, not enough time.
yeah, I can't even
Exactly.
find really any valid. I can see a little bit of a level there, but
Hard to say. Yeah, no, that's cool. I just thought I'd
yeah,
ask.
no, yeah.
Hmm.
So what's that now? 20 cents. Anything else?
Yeah, that's it. I think.
Right.
Yeah,
So
Yeah.
what I'm going to do is I'm going to so I've got so we've gone over a little bit over time now, but I've written down those two things: trading, like trade placing, and
Yep.
also I actually do want to do talk about the correlation between old BTC and BTC USD. So I'll look into that next lesson, next Sunday session. So come around for them, and yeah, we'll get it going then.
Awesome.
Alrighty, fellas. Well, that's everything. That's all I had to do. Oh, I've got a little iPhone here.
Thanks, Jared. Very good.
Alrighty,
Cheers.
mate.
Thanks for your time,
Cheers,
man.
guys.
Thanks.
See ya.